So, welcome to the Monkey Stock Club. For those who are new at this channel, my name is Monkey B. I love to go out there and finding some nice stocks just for you. So all you have to do is just watching this video and decided if the following stock could be something for your portfolio. It doesn't get much easier than that. In return to that, please feel free to hit the subscribe button below and become part of the Monkey Stock Club family, so you will never miss a video again. Please be aware that everything I say here is just my opinion, as I'm not a professional investment advisor. As you can see, I'm just a monkey, but nevertheless, I love to analyze stocks just for you. So let's stick around and discuss some numbers now. So to analyzing the stock, I use the high growth investing strategy. It consists of 6 KPIs. For every KPI you can get 0 up to 3 points. So in total, a stock can get a maximum of 18 points, and this indicates a high growth stock. So today I'm gonna talk about HEXO, a cannabis company. This is a stock I discovered for me just weeks ago. And I'm here to do my best to explain why I think HEXO stock could be a great opportunity for us. And yeah, I'm quite excited about the performance of the company. So stick around for the entire video because I think there could be massive opportunities in this high growth company HEXO. And yeah, let's stick around and start with the 6 KPIs. The EVS divided by sales actual, the gross margin trailing 12 months, rule of 40 score, sales growth, debit ratio, and the price per earnings divided by the growth. So I will do a solid, pretty solid breakdown of the company figures, and also the high growth investing analysis, where a company can get a maximum of 18 points, as you can see here. And yeah, at the end I will also give you an overall estimation of the fair value of HEXO. But yeah, try to look the whole video, because at the end there could be an opportunity to multiply your money by at least 2.5. So first of all, the EVS divided by the sales actual. So if you take the market capitalization minus the cash plus the debit and divided it by the revenue, so 286 million divided by 60, you end up at 4.79. So that's what I calculated. The last version of Yahoo Finance showed us 3.76. So nevertheless, both figures are below 8, so we received 3 points. And yeah, the enterprise value is a measure of the value of a company regardless of its financing. And the first 3 points. Here also you can see the strong decrease. We came from around about $7-8 and going down at 0.75. So next one is the gross margin. We take the sales, reduce it by the direct costs, which we can see also in the income statements of Yahoo Finance for HEXO Corporation, and divided it by the sales minus 125. And this indicates the profitability of a business model, and the higher the percentage, the more money a company has available for other activities like sales, marketing, research and development, and new cannabis tastes, for example, or other cannabis products. So as we are far below 50%, 0 points. Next one is the rule of 40. As you can see here, we take the sales growth rate trading 12 months, 67%, plus the free cash flow margin, unfortunately a highly negative value of minus 255%, so we end up at minus 188%. And the rule of 40 is a simple key figure to assessing the efficiency of a company growth and its quality of the business model, let's say. And the higher the value, the better the business model of a company is, and every value above 40 is could be considered as attractive. Here we have 0 points, as we are far below 40. Next one is the sales growth, 67%. So we are above 40%. So in the high growth investing analysis, everything above 40 will be considered with 3 points. So we received 3 points under these circumstances. Here you can see also the last 3 years. Sales 18, 25%. Sales 19 was huge with 828%, and currently 67%. So strong decrease compared to the last year, but the sales growth is still in very nice value of around about 70%, and indicates also an high growth development of HEXO Corporation. The debit ratio, quite nice and always very important due to the fact that the ratio can indicate low debit if we have an debit ratio less than 1, while a debit ratio greater than 2 indicates possible risk for debit. So we have 0.16, so means that HEXO don't have such not so many debit in last quarter compared to the equity of last quarter. So we have around about 66 million of debit and 418 million in equity. So that's quite nice. We are below 0.5, so we will receive 3 points. So under these circumstances, we can say we don't see any possible risk in terms of debit. So that's quite nice. And here, last but not least, here a small mistake. We will receive 3 points as we are above 1. So we have an PEG trailing 12 months of 26 currently. That is what I calculated, divided by 75%. So 0.35. So that indicates that the growth stock is currently undervalued. As Peter Lunch already mentioned, if the ratio is lower than 1, that indicates an undervaluation of a stock, and this could be our opportunity and a very nice chance to get into HEXO. And yeah, this is the result, 0.35. So currently HEXO is undervalued. So overall, we have not 9, we have 12 points for HEXO, as we have also a positive, or we also get 3 points for the PEG. And yeah, currently, as I mentioned, 0.75 US dollar. And if we take a look into the profit growth estimation, we have minus 0.05 for this fiscal year, so still in the negative profit area, but that is why I think HEXO could be a very, very nice opportunity for each of us, because if they will come up and we have to break even and go into the positive profit area, then there could be quite a nice boost in terms of the HEXO stock price. So unfortunately, or let's say normally we can't calculate the fair value, as I mentioned, due to the fact that the EPS is negative. But what I did is to, let's say, have a scenario, what would or what does it mean if HEXO would present us in at least 2021 in positive EPS of 5 cents, for example. If we would compare it to the last 4 years, then we have not 24% as the current estimation of negative EPS still in 21. We would have then an average of 39% if we compare it with the EPS 17 of minus 0.13 with 0.05. And if we would assume that HEXO Corporation would present 5 cents in 2021, or if they would achieve this EPS for the next fiscal year, then we can multiply it and end up at around about $2. And you can imagine if they would present 20 cents, for example, that could be a huge opportunity. So they could be in at least a pump back to a level of $6 up to $8. And yeah, that is what I would like to share with you. I hope you enjoyed the video, and drop the like button for the YouTube algorithm. I would really appreciate it, and also please feel free to hit the subscribe button below, become part of the Monkey Stock Club family, and you will never miss a video again. You can also hit the bell button, and you got the hot stuff after releasing the video, and when I upload some new stuff, you get also an alert. And yeah, that could help you also in terms of some investment decisions. And yeah, take care and have a nice day. Bye bye.